Good morning. This is Mark Sebastian, founder of OptionPit.com, and your AM volatility report reminder. None of this should be construed as investment advice. Consult your financial professional. Options have risk. If you lose money, it's your fault. Hey, we got a webinar tonight. Check your emails. It's been sent to you. All right? That is the key. Check your emails. So let's talk about the market here. Well, here we are, and we are inched lower. Market feeling a little toppy. You'll notice the VIX stops selling off. Things have backed off a little bit. I think we hit our low in volatility for the week yesterday morning. And now there's a decent chance that, things maybe potentially, in terms of volatility, maybe not the futures, but VIX itself likely to creep itself a little bit higher for the next day or two, and may potentially come in Tuesday up. I mean, I think the VIX, even though it says 1380, if you move ahead to next Tuesday, it's really about 14.5. So yeah, we've had a nice rally, but risk has not totally come out. Now, do I think we could maybe creep higher to 2100? Yeah. But do I think the upside risk, the upside value is there relative to the downside risk? Probably not. I think the easy money on a rally has been made and is likely to dissipate, and now comes the less fun part, the hard trudging. So, my gut says we're probably going to be off today, and volatility is going to creep a little bit higher. Maybe not a lot, but a little bit. And you could start to see some demand for VIX options, and you're likely to see the VIX futures curve flat or at a minimum, or even potentially moving higher. There's some real chance of that happening. Then, looking around at different stocks, the Apple move seems to peter out. Even the financials are down after a really nice run on them. And you've got, some of the ones that really push the rally higher are not moving as much. Transpos are down. Take a look at gold vol, because that's an interesting thing to look at, because it's finally kind of found a place to trade and stop dropping as gold kind of broke out. But looking at for where is their cheap vol, I continue to think it's in a long-term bond volatility, which to me simply looks too cheap. With how much bonds could move and can move, especially with the Fed coming up, it's hard for me to look at this bond volatility and think that in TLT and think that this isn't a purchase ahead of a major Fed meeting, a Brexit vote, and all sorts of other things. So the back end of the curve vol too low. If you want a more clean look at the 10-year, also low. So bond vol too cheap, time to buy. That's kind of my feeling, and that's the trade that we're going to be looking to set up. I'm going to probably write something up for the street, and we're going to look at a smart trade in that during the pit report today, because I don't think bond vol is going to move, and I think that there's an interesting place to trade against volatility in the S&P and so on the day, again, I expect volatility to potentially dissipate, and or the low vol to dissipate. I think you're going to see the futures rally a little bit, and I'm expecting the VIX to maybe get back about 14, and I think we're gonna back off a little today. Just to sum things up one more time, it's already next Tuesday in terms of trade, so there's tons of volatility exposure available. All right, folks, if you got an email or if you've got questions, you can email me, mark@optionpit.com. You can call me 888-TRADE-01. Have a good morning.